So something strange is happening today with AMC stock, and this could be a sign that something bigger is on the near-term horizon. So I'm going to give you guys a rundown of what happened today, what's going to be happening tomorrow, things you need to know that are happening in the broader markets that could affect AMC, go over any particular news that may have came out with AMC on the day, but kind of break down why today is pretty strange relative to what you have seen before, and kind of similar to what you've seen before the last ruling from the courts, in which sent AMC stock up 40%, give or take. The next day, it was up like 100% at one point a couple Fridays ago upon the initial ruling from the courts that the settlement would not be able to go through. So we're going to get into it. I hope you guys find this insightful. I don't have a crystal ball, so I'm not a fortune teller and not a financial advisor. So come to your own conclusions. Always, you guys already know. Shouldn't even really have to say that at this point. But nonetheless, first thing that's happening today is what we talked about in the last video. Fitch downgraded the U.S. credit. It's kind of like imagine if you had a 700 credit score and now you got a 650 because you missed a payment. Well, your borrowing costs are going to be more expensive if you need to go get a new loan or something, right? So it kind of makes your credit worthiness less. And when that happens to the entire U.S. economy, that's not good. America's credit being so strong is one of the reasons why you can get a 6% auto loan. In a lot of other countries, that's not the case. But people want U.S. dollars. Now, this really affects the treasury market the most. You're seeing bond yields going higher on the day today. They've kind of calmed down a little bit, though, which is interesting because as far as history is concerned, when there is a fear move, bond yields typically fall. What I mean by this is during COVID, for an example. When stocks fall, bonds typically rise. That's because stocks are a lot riskier than bonds. So if there's a problem in the markets, like what we've seen with COVID, and people start panicking, well, people bought the bonds, and the bonds did very well. Let me go ahead and pull this up for all of you. We'll just look at the TLT. Well, what happened during COVID? People were like, oh my gosh, the world is ending and the economy is going to collapse and all this. So what they do, they aggressively bought bonds, very aggressively. The bonds gapped up. You don't see the bonds gap up unless you have a real problem. Well, what you've actually started to see throughout the day today is the bonds actually starting to go higher from the low that we hit of the day. You've actually bounced quite a bit in bond land, only down about 1% today. So the actual 10-year treasury is now at 4.07%, only up 2 basis points on the day today. So the best way to look at this is when bond prices fall, when TLT, what I'm showing you here, when this chart TLT is red, that means bond yields going higher, right? On over here on CNBC. Won't let me move this apparently. Yeah. So when this chart is down, as you can see on the screen, TLT is down about 1%. The 10-year treasury yield itself is up. So when people start to freak out and panic, like what we've seen during COVID, the bond prices go higher and yields would shoot down. So what you've seen since the open of trading today is basically yields coming down on the 10-year treasury, which should not happen if you just got downgraded. So this is a little bit of a fear move in the markets today, and that could be setting us up for maybe a deeper crash to come. Ultimately, we will have to see. Now, that's the big story of the day today. You also got the jobs report, which the private sector jobs added 324,000 jobs in July, well above expectations. The estimate was for 175,000 job ads. So we got a problem. Okay. This is not what the Fed wants to see. This is not good news for the Fed. Although the credit rating getting downgraded does constrict liquidity even more. It's doing a little bit of the work for the Fed itself, and it could lead to less rate hikes or maybe no more rate hikes. So that's the positive out of all of this. Now, with AMC stock today, what is really strange is the stock is only down. Let's go ahead and replace TLT with AMC. Let's make sure. Okay. The stock is only down about 2.33%. A lot of other stocks that are deemed much higher quality than AMC are doing much better. So on a day like today where the Nasdaq is down 2%, I would not expect AMC to be positive. I would expect AMC to be down 5 to 10% along the lines of what other stocks are down today. That's not happening. AMC is holding a lot of strength. Now, you could say this is because the FTD numbers, and if we go ahead and pull this up, there's massive FTD numbers. I believe the FTDs today that need to be covered are about 12.6 million, 12.7 million FTDs. So that is definitely going to have a bullish kind of supporting buying power to it. But it's strange because even if you look at the options market, you're not seeing the same amount of activity as you were seeing previously, and the positive order value is 8%, which is better than yesterday's 2%. So you're seeing some strange things happening with AMC. You're seeing relative strength with AMC. This kind of leads me to believe, like, hey, are we getting some kind of announcement here soon from the courts? That honestly wouldn't surprise me with some of the data that we are seeing here today. Now, if we take a look at some of the raw numbers here for AMC, the short score is 93. Dollar amount currently sold short in AMC, 757 million. Estimated short interest of free float at about 30%. Free float out on loan at 36.53%. Shares out on loan 188.61 million. Days to cover sitting at about 8. Cost to borrow trailing 3-month average at 244.23%. And utilization is at 81.31%. So, I don't even think I have to say it. These are record high numbers. You've never seen anything like this. And still, AMC is on the threshold securities list. Note the FTD numbers just continue to ramp higher and stay over 10 million, really over 11 million for the next couple of weeks here, I believe. Yeah, you're going to be over 10 million FTDs every single day for at least the next 2 weeks. And the closeout dates are every single day that we are trading up until then. So I do expect a little bit more resilience, but the level of resilience we're seeing today is a little bit strange. Now, Ortex estimates for the short interest of free float at about 29.75%. Now, obviously, if you're looking at the free flow out on loan that is actually sold short, could be over 100%. Just based on how many shares retail investors own in their portfolios. If a lot of retail still owns AMC, it's hard to quantify this, but last we knew it was 80% plus, then the real short interest is well over 100%. Cost bar average, 352.2%. Cost bar max, 380%. Cost bar minimum, negative 1.2%. Interactive Brokers has the cost to borrow fees currently on AMC stock at about 170%. So some very, healthy numbers, let's just call it that you're seeing over here, putting a lot of pressure on the hedge funds and institutions. Now, if we take a look at the next biggest catalyst for our markets, tomorrow morning, you're going to get the ISM Services PMI. Now, if this one goes down, that's going to be seen as a positive for the markets. You're expecting 53. Last month's reading was 53.9. The last thing you want to see is this reading come in really aggressive, like really strong. That's not exactly what you want to see. And so just keep that in mind. Also, bond auctions tomorrow will be very important. The Treasury announced earlier in the day today that they're going to start selling even more bonds during these Treasury auctions to fill that TGA account back up. That's the Treasury General account. That's the account in which we almost ran out of money in. That was the whole X-date debacle, the reason why we really just got downgraded. So the Treasury is going to be raising more money. Last week, you seen a 7-year bond auction come in with over 4% interest rates, like 4.10% rates. Nobody showed up. Nobody wanted those bonds, which really makes you wonder why. But at the very least, to look at the next bond auctions and say, hey, these are going to be a little bit more important to the markets, and it could give us more dramatic moves. Now, tomorrow, the biggest story for the markets, obviously, is Amazon and Apple earnings. Those are going to be the big guys, depending on what happens there. I would firmly expect the markets to, rip higher or even fall quite dramatically if those earnings are bad. Now, Friday's economic data is also going to be very, very, very important. The unemployment rate for July is expected to come in at 3.6%. This data comes out at 8:30 in the morning. If you come in 3.6%, that's great. That's awesome. If it's lower than that, that's even better, because after all, you don't want to see the unemployment rate go higher. Sure, that means the Fed might not raise rates anymore, or slow down for sure. But as long as inflation comes down, and we've seen it coming down and it's continuously going down, well, the unemployment rate can stay low. You don't need to see the unemployment rate go higher. You do need to see JOLTS job openings come down, in which that did a little bit, but not quite as much as some people were hoping, and that data came out yesterday on Tuesday. Now, the non-farm payrolls are coming out as well Friday in pre-market. You're expecting 200,000 job ads. Last month was 209,000. If the ADP report today is any sign of what we're going to get, it's probably strong jobs numbers. So, that's not having a positive effect on the markets today, that ADP jobs report. So just watch that and see how that does ultimately develop. Now, if we take a look at some of the insider activity with AMC as well, I noticed this. Intera Capital just bought 20,000 shares of AMC back in July, and they only own about 93 million shares of APE currently. It actually could be lower than that as of right now, but they've been dumping their positions, right? They've been absolutely just dumping out of their APE positions. It makes you wonder if they knew this was coming, this ruling from the courts, or if there is another ruling coming shortly. And that's kind of what it looks like is happening at this point. Now, as far as AMC and the actual technicals, like I said, you gapped up, you came down, you filled the gap. Now you're making this upward move. And even today's candle, if this holds throughout the rest of the day, is very encouraging. This would be what I would call a hammer candlestick. The stock went down, it found support, the buyers came in and retraced all the way back to the upside. It's even possible AMC goes positive by the end of this day. If that were to happen at the same time the markets are selling off, then you definitely have a clear sign that someone somewhere likely knows something. So let me know what you guys think about all of this information down below in the comment section. Hit the like button and subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.